Hello, my name is Steve Bigelow with the Candlestick Forum. The market reversal of the past week has provided some very strong swing trade setups. As we saw, the MorningStar signal in the oversold area on the Dow, right about the same level it bottomed out before, brought this quick trade back up to the first resistance level that we would expect, right here at the 50-day moving average. As you can see, it touched it today and pulled back. Doesn't mean the uptrend is over. This means there might be some consolidation. Same scenario here on the NASDAQ. The bullish engulfing confirmed, came right up to what could be perceived as a resistance level. Again, stochastics coming up, seeing some selling doesn't mean that there's a downtrend starting, just means there's probably going to be some consolidation. But when the market is not trading below the T-line, that gives you a lot more opportunities to find the swing trade setups that are going to produce the best results. Our recommendation on BIVI this morning was based upon the fact that we could witness this fry pan bottom. It failed at this level, but notice where it pulled back to, right smack dab back to the 50-day moving average and started back up again. What is our expectation coming out of a fry pan bottom? A very strong price move. That gave us the opportunity to start buying right in this area as we saw the consolidation over and the bulls stepping in. Now, the rhetorical question is, do we always get big percent price moves like this? The answer is no, but we're putting ourselves in situations where the probabilities of being in big price moves based upon a pattern breakout is greatly in our favor. Anytime we can see a trade setup where we can put a swing trade like a bobble breakout, there's your J-hook pattern after it failed at the 200, came right back to the T-line area, and when it came back up through the T-line, through the 200, doing a J-hook pattern, it becomes a more defined J-hook based upon the fact that we know we can be buying immediately for a good swing trade. Because what is everybody else doing? They're not trading this pattern. They're waiting to see if it can get out through the 200-day moving average, which enhances our trade setup. The strongest of all your trade setups are your best friend signal, as somebody was pointing out the other day in our chat room. There was your best friend breakout. And this was during a time when the market wasn't acting well. Notice when it turned around, this was a very strong price move. Our recommendation on Civi, the same thing. Doji gap up. This is the type of trade we expect after that type of breakout situation. Same thing in MUX. Best friend gap up. And we recommended AI based upon that same scenario. However, today, Morgan Stanley apparently put a sell recommendation on this, which doesn't mean a whole heck of a lot, because this is what investor sentiment was doing. Today's selling was probably predicated on one analyst or one brokerage firm, not the whole investor sentiment out there. So where does this become a good swing trade entry? If it comes back up through today's open and tomorrow's trading or the next couple of days, that tells you wave 3 is still in progress. Again, this is based upon hundreds of years of Japanese race traders illustrating what the signals and patterns are likely to do and where the optimal entry points are for any trade. When we see a left-right combo, in this case, a left-right combo after a series of dojis right off the 50, when it opened positive, what this does is it negates that hesitancy of a lot of investors saying, oh, I'm going to wait for it to pull back till I can get in better. You don't want that. You want to be buying based upon the strength of the signal, the breakout. Where do you think the next likely target is on a swing trade? Up here at the 200-day moving average. So anytime we can see a trade setup, knowing what a pattern should look like, the breakout on Kayla. First day came up strong, showing you new interest in this stock. Then they gapped it up today above the 50, telling us this indecisive day if they open this positive tomorrow, you want to be buying immediately because the magnitude of this day will usually be the same magnitude as this day. Again, this is just visual recognition of what happens in investor sentiment and what type of price patterns they usually illustrate. There's that MorningStar signal. Not only was it a MorningStar signal, but the third day gapped up, closed well above the halfway point of this candle, closed above the 200, the 50, and the T line, and traded positive. This is a good indication that we're in wave 1, wave 2. Now we're going into wave 3. Again, this is not rocket science. This is what investor sentiment usually does time after time. So it works both on the bullish side as well as the bearish side. We recommended shorting BMBL, Bumble, because there was your kicker signal. What does a kicker signal reveal? Very strong bearish sentiment. So when they started trading this lower, it becomes a high probability trade that now we're in wave 1, wave 2, wave 3, starting with a strong price move to the downside. So we can see what the setups are based upon simple trading signals. Look at the gap down doji. Today did a shooting star doji, kind of setting up a double doji situation, which means if this opens lower tomorrow, there's a strong probability there's going to be more strong downside illustrated by this right here. The consolidation's over. Now look for more downside. So these are the type of things we illustrate in our training every Monday night for members. Thursday nights are open. So try our 2-week free trial. It doesn't cost you anything. And what it does provide for you is just an illustration of the logic that's built into the candlestick signals that work time after time. Worst case scenario, join us Thursday night. We do a free chat room showing people different signals and patterns. That'll be it. We'll see you in the chat rooms.